Good morning, ladies and gentlemen. Welcome to the Property Industry Press Conference. I'm Henry Hemming, Chief Exec of Property for Media. We've organised today's event. It's great to have you with us at this momentous time in the history of the property industry. We felt it was right to convene a press conference, and for an extraordinary time in our industry, we have convened for you an extraordinary lineup of property industry professionals to discuss and debate the crisis that the industry is facing, but also just to look at how we might resume normal operations. What routes might the property industry take to get back to normality? That's what we're going to be finding out from today's panelists who are here with us for the Property Industry Press Conference. We have a large audience with us today. We were delighted to approve over 250 registrations. Many media representatives, both in the UK and internationally, have taken interest in today's event. We've also got a huge number of property industry professionals and also analysts and further professionals focused on the property sector who all want to know how the property industry may once again move forward. So I'm going to introduce our panel and then I will pass to our moderator to let them all speak to you. Our panelists will each speak for an opening section of 5 minutes each, and we will then take questions from media representatives in the audience. So media, do feel free at any stage to place questions, because our moderator, Graham Norwood, may even start to ask questions of the panelists at the end of their opening address. If you are posting a question today, please put your company or media title name at the end of the question, because Zoom will tell us who you are, but it may not tell us which media title you're from. So that would be really, really helpful. Please feel free to post questions at any time. So we have, for the buyer's market, we have Camilla Dell, managing partner and founder of Black Brick Property Solutions. Camilla has worked on the London property market since 2002, has unique experience in meeting the needs of domestic and international buyers. She has previously worked for two of our largest players here, Foxtons and Knight Frank, before she set up Black Brick in January 2007. For residential, we have Liam Bailey, Global Head of Research at Knight Frank. Liam writes and presents on the property market trends around the world with a focus on residential. He has grown and deepened the insight offered by Knight Frank's research team and now heads up a team of over 100 people reporting on everything from residential and commercial to data and analytics. For international, we have Sven, Odia, Chief Executive Officer of Engel and Völkers, one of the most established international property brands. Sven trained to become a real estate professional, ran an Engel and Völkers agency from the age of 22, rose up through the ranks, was appointed to the management board, and since 2014, he has jointly managed the entire Engel and Völkers group together with Christian Völkers as co-CEO. For the online market, we have Richard Donnell, Director of Research and Insight at Zoopla. Richard's knowledge of the housing and property market spans over 25 years, and indeed the mortgage markets. He's previously worked at Savills and HomeTrack, leads the research and insight group at Zoopla, the UK's most comprehensive property destination, and he's an established commentator, features regularly on radio and TV as well. For the consumer, we have Paula Higgins, Chief Executive Officer of HomeOwners Alliance. 15 years of reviewing and reforming housing and planning policy for the UK and EU governments convinced Paula that the consumer doesn't have a proper voice at the decision-making table, hence her decision to create this powerful industry body in 2012. She provides leadership and strategic vision for her team and is also, like many of our panelists, a recognized commentator and appears regularly in the media. I think I've covered everyone except for our moderator, Graham Norwood. So we're delighted to have with us as moderator today, Graham, a leading property journalist and commentator. He is in a trade capacity. He edits two titles, Estate Agent Today and Letting Agent Today, but he's also a regular consumer-facing property journalist writing for the Daily Mail, Sunday Times, Telegraph and others. And I'm delighted to say he also became Property Journalist of the Year at the Property Press Awards this year, run by Property for Media. So as I say, our speakers will make a short opening presentation. Graham may put some questions to them at that point, and then it's over to you, our media audience, to place your questions and get the answers that you are looking for. I just wish Graham and the whole panel the very best of luck. Great to have you here. Graham, over to you, please.
Henry, thank you very much, and thank you everybody for participating in this. I think the aim is for this to be as lively and interactive an event as possible. So as Henry said, please feed in your questions, giving your name and your title, the company or the publication you're from. One practical thing, my understanding is that if you are watching this on a desktop or a laptop, the way to get questions to us is through a button that you'll find at the bottom of your screen. If you're watching this on a mobile, it will be at the top right of the screen that you'll find the ability to set some questions. So please send them in during the course of people's introductory statements, the first of which will come from Camilla Dell from Black Brick. Camilla.
Thank you very much, Graham. Good morning, everybody. It's a pleasure to be speaking to you all this morning. My sort of statement on the impact that COVID is having on the market comes very much from a buying agent's perspective. Primarily, my team and myself, we are focused on looking after clients who are looking to purchase. So I think really the impact of the pandemic on the market, the biggest impact being the complete drop off in transactions. It's been incredibly difficult to transact any new business during the pandemic. We have successfully managed to still exchange contracts on deals where buyers had previously seen those properties prior to lockdown. And obviously on transactions that we were working on that had already exchanged, thankfully they have completed during lockdown without any major issues. But in terms of new business, it is incredibly challenging. And yes, virtual tours, they definitely help. I, however, am very firmly of the belief that ultimately I don't really believe that buyers will purchase something that they haven't actually physically inspected themselves. I think there's always the exceptions to that rule. Certainly for people purchasing off plan, you couldn't physically inspect anything that's off plan. And possibly on lower value new build, there are some transactions going through, but I just don't believe that anybody spending a significant amount of money is really going to do that off the back of a virtual viewing. So I think the challenge for the residential property market, and in terms of emerging out the other side, it really, as an industry, we need to come together and really look at how we're going to get back to business and how agents and buying agents are physically going to be able to start inspecting properties again, because don't forget, as buying agents, we often preview before we actually physically take our clients in to see properties, and how we actually go about doing those viewings. So I very much hope that as an industry, we're going to work together and come up with a set of rules and guidance that gives everybody confidence, not just agents working in the industry, but also people that are looking to sell, and also buyers, so people feel confident about getting back out there again. I think that is really, really important. But I think in terms of pricing and looking ahead, obviously that's something that my clients are really interested in, and they're also quite nervous. They're nervous at the moment because they're very worried that if they were to purchase a property today, will it be worth less in 6 months' time or 12 months' time? Hats off to Liam and some of Liam's competitors at Savills. They've been doing some forecasting in terms of what they think will happen to the prime central London property market this year and indeed over the next 5 years. My personal take on that is it's incredibly difficult to predict, particularly at the moment when there's absolutely no data to go on. And my belief is I do think that prices will come down in central London. And the reason for that is talking to my clients. None of my clients right now would be happy or willing to transact on property transactions on prices that they had agreed in January or February of this year. So there is this huge gap between where buyers currently feel the market is at and where sellers feel the market is at. And it's something that's called, what I love to call, a Mexican standoff. And we've seen this before at different periods, and I believe we're going to see it again in a major way, even once we come out of lockdown and agents are able to view again. There is this big gap between buyer and seller expectation. And so it's my belief that the only deals we will see going through are really where sellers have to be pragmatic on pricing and have to sell. And it's those classic 3Ds: death, debt, divorce. But I also believe that the new build market is likely to be heavily impacted, particularly with developments that are extremely popular with overseas investors. We heard yesterday our Prime Minister Boris Johnson make an announcement that he was putting the country on standby, that very shortly anyone arriving into our airports will have to go into quarantine for 14 days. Well, I can tell you that most of my overseas clients are not able to do that, not only because they can't take 14 days away from their businesses, but they normally stay in hotels. And hotels at the moment, they'll be one of the last things to open. And I predict that, you know, the overseas market does absolutely have a very strong impact on central London market, particularly new build. So I just don't see how that market can continue to be resilient and not see any price falls. I think the market in central London will be led out of recovery very much by domestic buyers and needs-based domestic buyers, people that really got caught in the middle of this, in the middle of a move, and had to move. My final prediction in terms of the way the market might change going forwards, I definitely think that buyers' priorities will change. And in terms of things that they look for on their wish list, I think things like outside space will become much more important. And possibly we might see things such as proximity to transport links, something which was previously so important, particularly for buyers and indeed renters in central London, perhaps not be quite so important, as people have discovered that actually working from home has been successful and is something that is sustainable. And I believe it's something that's here to stay for the longer term, this working from home. So those are my predictions for the future.
Thanks very much, Camilla. Perfect timing as well. Can I ask just one question before I ask Liam to come in with his introductory comments? And that is, there was a reference in the Telegraph this morning to some buyers from the financial services sector, residential buyers, beginning to look at Berlin possibly as an alternative to London, to base their activities and therefore to buy a pied-à-terre or a property of some kind. It's very early days, and that may or may not have been, you know, based in a lot of evidence. But do you think there is a danger that because of the way that Britain has been perceived now as the European centre of the pandemic and the measures that have been taken, you've touched upon quarantine, do you think there is a danger that London may be falling off its safe haven pedestal?
I think in the short term, you know, nobody wants to have the level of, you know, the city with the highest or the country with the highest COVID deaths. I think it's not a title that anyone aspires to have. I think in the short term, it is certainly damaging. But I do believe in the long term that London will always be London. And I do believe that as much as there are people possibly now looking at other cities, there's also a lot of investors at the moment looking very keenly at London and thinking to themselves, this could be a fantastic buying opportunity. Not just because what might happen to the market in terms of further price falls, but also in terms of what's happened to sterling. I think the big problem for some of those opportunistic investors is very much going to be, where are those opportunities? Certainly at the moment, we're not seeing evidence of much distressed selling, but I can tell you there's a lot of interest there from investors looking very, very keenly at London from an investment perspective. So I think short term, it has been damaging. I think it's been damaging for the world. and possibly some people might look to diversify and look at other cities. But I do believe long term, London will continue to be one of the top cities where people want to invest.
Okay, thanks a lot. Liam Bailey will be known to a lot of people, and Knight Frank has been perhaps at the forefront of estate agents keeping journalists up to date over the course of the coronavirus period, with a morning update being sent to all of us. This morning's generated a story that I did on Estate Agent Today because of the information it gained about how estate agents in the UK may be getting some specific guidance later this week as to how to operate. So Liam, you are Global Head of Research at Knight Frank. Please give us your take on what's happening.
Thank you very much, Graham, and also thank you to Camilla for your introductory remarks. So very briefly, look, I think the context is that we can be pretty certain that this year is going to see a significant downturn in the economy, both here in the UK and also globally. What we don't know with the same confidence is what the shape of the recovery will be, although most forecasters are saying there'll be an equally rapid uptick in the economy. And the reason why we're uncertain on this point is we just don't know what an exit from the lockdown actually looks like. And actually, to Graham's first question, we might think the UK government is struggling with next steps at the moment, but you take a look at Singapore, or in the news this morning, South Korea, or even Germany, and everywhere seems to be facing kind of 2 steps forward and 1 step back. And that's without contemplating sort of secondary spikes later in the year. So in terms of where the market is right now, as Camilla said, I mean, the lockdown is pretty effective. If you look at viewing levels, we're down probably 98%, and the 2% that are taking place are virtual. Now, most metrics are down sharply lower over the last 5 weeks, maybe slightly less than you might have expected, but they are down a lot. So new buyers are down 60%, new properties on the market down 90% year on year, offers made down 80%, offers accepted down 70%, and exchanges down 70%. So actually a significant downturn in activity, although some things are still moving along in terms of purchases, but they tend to be the things that were agreed before the lockdown began. In terms of the outlook for this year, transactions, there were about 1.18 million transactions in the UK last year. And before COVID struck, we assumed the Boris bounce, the election bounce, that you'd see an increase this year to about 1.26 million transactions this year. But since COVID struck, we've reduced our forecast to about 728,000. Based on our modelling of what we think will happen over the next few months. So a decline of about 40% in transactions this year compared to last year, the lowest for about 20 years. So around 500,000 missing sales this year. And next year will be stronger, we believe, and some activity will be carried forward into next year, but there'll still be about 300,000 sales lost in the long run. So i.e. households not being created, children not leaving home, etc. All those reasons why you'll see less transactions in time. In terms of prices and the outlook for prices, I think it's interesting to look at what's happening right now. The problem is, as Camilla's mentioned, published indices aren't particularly helpful. There's so few transactions taking place, and they're also backward looking. So to get a handle on the market, we can look at current data or current market activity. So for example, if I look at exchanges, exchange data in late March, so the peak of the market really before the COVID struck, exchanges were taking place at about 98% of asking price. Now it's about 95%. So if we assume that everything else is equal, and in very simplistic terms, we've seen probably a drop of say 3% in price in just over a month, which is a pretty significant downturn. But remember, these are deals which were agreed 4 to 6 weeks ago. So if you look at more recent data, if you look at the offers that have been made by buyers and which are still being accepted right now, in late March, it was about 98% of asking price. Now it's about 94%. So it's about a 4% drop. Now let's allow for the fact that some asking prices have come down since March, and the data suggests that prices are probably off already by about 5% on deals being agreed. Now, as Camilla said, we've happily been producing forecasts, bold, foolhardy, you call it what you may. The forecast we published at the beginning of April was for a 3% fall in UK prices and 0% in prime London. Now, we were basing that on the assumption that the lockdown would be lifted in totality by the end of May, and actually the second half of this year would see some recovery. And also, the prime London forecast allowed for the fact that we'd seen 25% drop in prices since 2014. Now, since Sunday night, it's getting clearer that we're not going to get a lockdown for several months. And if anything, therefore, we're revising our forecast. But where to? I think 5% down is a good starting point. I think it's increasingly clear, as Camilla's outlined, prime central London's 5-year decline doesn't mean that it's immune from a further downturn in prices. So if we assume, for want of a date, a full lifting of lockdown by, let's say, mid-July, at the same attrition rate that we've been experiencing, it would suggest that prices could be 12% lower at that point compared to pre-COVID prices. But the problem is, and Camilla used a wonderful phrase, the Mexican standoff. Will vendors accept these discounts? And I think there's increasing evidence that they won't. The spread between average offers being made and offers that have been accepted has now been widening for 3 weeks, according to our data. And I think the risk for anyone looking to sell or buy is that 2020, rather than being the year that the market unlocks after 3 years of Brexit hiatus, is yet another year where you get this kind of gulf between vendor and purchaser expectations, and therefore transactions will be lower again. If you add in the fact that you've got low new build rates, you've got low inventory and relatively low interest rates, I think that the reality is prices will still fall further from where they are at the moment whilst the market's closed, but I think they could still claw back some of those losses as the market reopens. And if I'm going to be foolhardy and put forward some figures, I think probably on a revision, prices will slip about 7% for the UK and maybe 5% for prime London by the year end compared to the beginning of the year. And that is my summary, Graham. Thank you very much.
Okay, thanks very much, Liam. Just before we move on, I wonder if I can ask, obviously your analysis and those of your compatriots doing a lot of the research that we use as journalists, the analysis is highly statistical and you can draw on all sorts of previous experiences, such as the Brexit hiatus, the credit crunch period and so on. But how, when it comes to transactions, how can you put some sort of figure on the sentiment issue that must be unique to the current situation? In other words, there must be a lot of sellers who will say, well, actually, I did want to sell, but I don't want to have 10 random individuals, even accompanied by an estate agent I trust. I don't want them coming around my house. I don't want what some people would see as the perceived risk of that. How do you try to quantify or make some sort of statistical judgment of that when predicting transactions?
Well, as you say, it's incredibly hard. I think that our assumption was that we would see a complete collapse in terms of new properties coming onto the market in April, May, June, and we've seen a significant decline, as I mentioned at the beginning of my presentation. If anything, we've been slightly surprised by the level of interest. I mean, it's fallen sharply, but you've still got, say, 30 or 40% of those vendors you would have expected to bring properties forward, still bringing them forward, even though we can't really actively market properties at the moment. So there seems to be, there are obviously a number of vendors who won't want to see people coming around their properties, but equally there are people who seem to be willing to actually get their properties ready for marketing. And all we can really do over the next few months is just track how those numbers are moving, and if we need to do, we'll obviously adjust our forecast. I think the key issue is that we've got in front of us a significant downturn in transaction volumes, and it will impact in terms of the creation of households. It will have a long-term impact in terms of, say, mobility of labour. And I think actually beyond the housing market, it's obviously got a bigger issue in terms of the outlook for the economy over the next few years.
Great. Thanks very much, Liam. Just before we move on to Paula, a reminder to please do get through your questions. Zoom will tell us your name, but do also add your publication. And I'll be coming to a whole load of questions once we've finished our introductory comments. I now move over to Paula Higgins, who's the Chief Executive of the Homeowners Alliance, a very different perspective on what is happening in the market now. Paula not only represents consumers and homeowners, self-evidently, but also a seat at the table in many discussions with the UK government over reforms to the UK house buying process. So, Paula, what's your take on what's happening now?
Thank you, Graham. The previous speakers are really interesting, and my opening remarks won't be based on data so much. For those who don't know Homeowners Alliance, as I said, we're a consumer group. We're mostly online. People come to us for practical advice on buying and selling and owning. We have a lot of, we can see transactions going through because we introduce people to mortgages, conveyancing, surveys, and that sort of thing. And I think, like the others, is that, you know, before coronavirus, is that is looking very, very healthy, very bounced back, and things have fallen off a cliff now. So people are not doing searches they're doing a lot of looking advice about how to get their property on the market and that, getting things ready, but they're not doing practical searches on trying to find conveyancing, mortgages, and that sort of thing. We are seeing that which is positive, that the transactions that are already ongoing in chains are holding, and they seem to be holding, because I think there is something to say that, disregarding house prices and whatever it is, we understand what people are saying is that home is really, really important to them. And if we're having a change in working, which I completely agree with Camilla, is that, will this be the end of Canary Wharf? Do we really need 7,000 people going into buildings anymore? Do people want to do that? Home is a much more important place to be. It doesn't need to be so close to transport links. It needs to have good Wi-Fi. It needs to have good storage, home working. So I do think there could be a fundamental change in the market and how properties are valued, and whether actually people who, they're living in London, maybe in a small property, but they realize they can go much further out and just come in once a week. So I think there could be a fundamental change. So people are really thinking about this. I think there's a big pent-up demand. We did some polling just a week after the lockdown measures were introduced, which was interesting. It was like 1.8 million people are not moving home because of the pandemic, but they want to move home. And there's more that want to move home because they realize that they're not going on the foreign holidays, that the home is really important. So we're a little bit more optimistic. We do see that people are trying to renegotiate prices, but again, it's also people thinking, actually, especially if there's another further lockdown, that they want to move before it happens again. So I think that we're slightly more positive about that. I do think that in the new build sector, that is where a huge nervousness is happening. And we do see people wondering, even because they've got the new build premium that you generally pay, do they want to make that kind of commitment because they are worried about house prices over the longer term. So what I think will happen is that, as I said, new ways of working. The estate agent is, now can finally embrace all the lovely tools and things we have on virtual viewings. I also think that this is the time that sellers, especially those nervous sellers who are worried about people coming into their homes, and actually at the moment, most of the transactions can happen online. We should be able to do this sort of more stuff online, and that will encourage conveyancing, everything that become faster. But I also think that sellers will need to be more prepared. So not just put properties on the market, have viewers come around, they need to prepare sellers packs. So I think there'll be more upfront information. People are not going to want to travel to go visit homes, to properties they want to see. They want that information before they decide to go into someone's home. So I think there'll be, in a way, that this is a chance for the industry to sort of catch up and be more modernized and new ways of working. And that's where I think it will go. So thank you.
Okay, Paula, thank you very much for that. A very interesting and different perspective on how things have been taken so far. Can I just ask, from your research, I know over the years you've done quite a lot of research into online agents and new technology and using that to make life easier for consumers. Everything I'm hearing from agents, Camilla touched upon it at the start of this event, is that virtual viewings have, they captured people's attention, but they've not really been game changers, to use the cliche. They haven't actually made people buy properties that they've seen on virtual viewings, even if they've kept interest up. Is that something you found?
I think, yeah, I agree with that, but I think it can be an initial tool that instead of traipsing around and looking at different properties and going in and open houses, so I don't think there'll be any houses anymore, that's sort of virtual viewings are very useful to have. But you are right, it's also a bit like we all like to look at, you know, our lovely properties and what we would like to buy the Sunday Times. So it's the virtual viewings is also good for that too. But I do think that the tools that are there are very, very, you know, and even just the way that you can do the surveys, the more accurate information that is available online. And we do hear valuers using this now as well. But I was told that valuers still feel it's even more important to do on-site valuation, especially if structurally that the market will change, that house prices might not be so led by London anymore. As I said previously, that there'll be different things that are important in people's houses, and whether it goes to open spaces, structurally sound, that sort of thing.
Okay, thanks very much, Paula. Our next speaker giving his introductory comments is Richard Donnell, a name very familiar to all property journalists in the UK and beyond. Richard, you are Director of Insight and Research at Zoopla, and what do you have to say about what's going on?
Thanks, Graham, and good morning, everyone. I'm delighted to be part of this Property for Media event. So yes, just a quick perspective from our what we're seeing in the market. So look, what we've been doing is tracking data daily across all of Zoopla's platforms, across both the sales market and the lettings market, across the whole of the UK. I think in a normal time, we'd end up with about 60 million visitors coming to Zoopla every month. So, you know, there's a huge amount of data we're looking at to see what's happening in the market on a daily basis. We're looking at browsing levels, demand, i.e. people expressing real interest in property, how many sales are being agreed, falling through, how much new supply is coming to the market or not. And I think that the simple thing to say is that all measures of demand and browsing for housing sort of fell between sort of 50 and 70% by early April. And things were starting to fall before the lockdown, sort of mid to early March. Everything's bottomed out now and is starting to post a sort of modest rebound. And we're seeing the rebound more so in lettings than in sales. I think there's an interesting differential here about how the lettings market, you're allowed to move into an empty property as a tenant and as a buyer. So I think, yeah, there's less friction at the moment in the lettings market, interestingly, which is something that maybe isn't coming out so much in the narrative. A lot of focus on the sales market. The other challenge when you talk about this bounce back in demand, it's not been a huge bounce back in demand, but the year got off to such a strong start, you know, after the election results, as Liam said, you know, 3 or 4 years of really kind of weak market conditions in London. The market was definitely set for a bit of a bounce back. So, and I think there's a real challenge comparing where are we now compared to the start of March versus where we were a year ago. So a good example, browsing levels for property are today 30% lower than the beginning of March, but they're actually back to where they were this time last year because the market didn't have that really strong start to the year. Harder activity measures, you know, all dependent on the market being open, agents being able to visit property and meet buyers and vendors. So, you know, sales agreed, subject to contract, new supply, listings coming to the market, they're running at about 10% of normal levels. So there is some pricing evidence coming through, really limited amounts, some deals being agreed on viewings before the lockdown. When we see on, you know, on what's happening, I mean, the stuff that's selling is around about 5% less in price than the average price of everything that's on the market. But again, it's really early days yet to sort of talk about any pricing impact. But again, I appreciate in some parts of the market, there are some deals being agreed. And I think whilst very little new supply is coming to the market for sale, there's been no mass withdrawal of homes from the market. A lot of people are, you know, the market's really in suspended animation and everyone, agents and consumers are all waiting for market conditions to sort of, if anything, reopen and some activity to start to pick back up. In terms of fall-throughs, the real peak of fall-throughs was on the day of the lockdown, huge spike in deals falling through. They've fallen right back now as people who can wait are waiting and seeing what's happening. And so what we worked out earlier this month, there's around about 373,000 sales held up in the pipeline worth about £82 billion. So at any point in time, there's quite a kind of bow wave of properties in the pipeline. Typically homes that sell today won't complete for 2 to 3 to 4 months' time. So there's a real lead-in time in terms of what's happening. In terms of how the market's going to re-emerge, there is pent-up demand out there. I'm surprised actually about how much demand we're seeing, people expressing interest in property given some of the economic forecasts out there. So, you know, the level to which consumers are sort of concerned or not hasn't really started to impact. I mean, it's certainly not enough demand to sustain a normal level of market activity, but absolutely, it's not like demand's gone to zero and is flatlining. There is absolutely interest in property. I think the outlook all depends on how long it takes to reopen, the economic impact, how much unemployment increases. Measures of consumer confidence have clearly moved much lower. You know, they're heavily correlated to house price growth. Again, you know, they've fallen back to levels you'd see in around about 2008. But I think the one thing I would say is, you know, let's not underestimate how far the government might go to support the market. Again, there was a debate this morning about, you know, how long might the furlough scheme keep going? You know, lower borrowing costs are enabling, you know, higher government borrowing, but there's a limit on how far the government can kind of go to support employment, to support the economy. But again, we only have to look back at Help to Buy and just how long since the global financial crisis that, you know, the government's gone to support housing and the construction industry. So let's not rule out further support or initiatives, you know, maybe a stamp duty holiday. You know, I think there's a real interest in supporting the wider economy and the role that the housing market plays within that. I think overall, and I think picking up the point made earlier, we think sales are actually going to be 50% lower this year than last year. I think a lot of deals just won't happen. People don't have to take lower prices. So I think the real sort of transaction volumes will pick up the biggest impact on the market. And I think we need to wait until the market reopens to get a sense of the pricing impact. There are so few deals being done. We just have to wait and see how mortgage valuations come through, how many deals sort of that were going to happen don't happen. Again, recent some surveys of consumers, I think last week, the week before, you know, 95% of the people in the middle of a deal think they're still going to carry on. So we have to wait and see how many of those really transpire to get a sense of what the impact on pricing. In terms of changes in behaviour, I agree with the points made earlier. I think there's going to be a fundamental rethink on how people work. They need to be in the office all the time. I don't think we're going to snap back to where we were. And I think this could really shift kind of commuting patterns and the sort of how housing markets are set up. And in an affordability constrained market, you know, I think when the market's in a normal market, probably people don't think about the sort of extras of their home, like the outside space, the communal areas. And I totally agree with the point made earlier. This is going to become a lot more important in what's important to people. I think a lot of people have probably spent more time in their home in the last 2 months than they might spend in a good part of a year. So I think people are really reevaluating it. It wouldn't surprise me if I would have a stronger bounce back in both the lettings market and the sales market as people consider, you know, is my house what I really want today? My home's really important to me. You know, maybe I need to shift and move. So again, let's not rule off the potential bounce back in demand from people kind of wanting to move, subject to what the economic impact is. I think on the point of new build, again, we're certainly seeing, I think house builders have got a real opportunity at the moment to sort of, they've got supply, they're back on site, they're completing units. Most house builders, the big ones, are sort of forward sold half a year. I think there's a real opportunity there for builders. I totally accept the point in high density urban schemes in London. I mean, those guys have been facing a challenge for a while now, the last 3 or 4 years, with the weak market conditions in London. But if you're building family houses in greenfield or edge of town areas, I think there's, you know, house builders could be in a good opportunity there. And we've certainly seen demand for new housing bounce back faster than resale housing. In terms of predictions in the longer term, I think, you know, we've got a structural challenge in the housing market, and I think we're stuck at around about 1 million sales a year, more moves in the lettings market. There's a complex mix of demographic, economic factors shaping the sort of how big the market is for movers and the size of the market that drives for estate agents, for house builders and for mortgage lenders. But I do think this point is around consumers kind of reconnecting with their home in a new way, how that will create demand, and this real mix of the head and the heart around your home. And I think that is a big opportunity for agents and for all of us to rethink about how we sort of engage with consumers around their home. So that's it from me.
Great, thank you very much, Richard. I'm delighted to say we've had a whole load of questions come in over the last few minutes, but there's still plenty of time for more. So just a reminder, please send in your questions. There's a Q&A button you'll find either at the bottom of the screen or the top right of the screen, depending on the device you're using. Please send that in. Please let us know who it's coming from. We've had questions from journalists, from PRs, from estate agents. We'll come to all of them, I promise. We have one more speaker to hear from first. There's never been a greater fascination in what's been happening overseas, both in terms of the overseas holiday home market, overseas investors coming to Britain, what's happening in other countries about opening up their housing markets again. Absolutely the right person to let us know about that is Sven Odia, who is the Chief Executive of Engel and Völkers. Sven, you are in Hamburg, I believe, and what's your perspective?
Good morning from Hamburg. You're right, I'm based in Hamburg. Very warm welcome from my side. It is such a big honor for me to be part of this press conference. I know our audience and our market experts are mainly from the UK today, and you are unfortunately still in lockdown. I try my very best to provide you with a lot of information and markets insights about our core markets in Europe, especially the German-speaking markets, and of course Southern Europe, but also North America, the United States and Canada. I started my career with Engel and Völkers here in Hamburg, Germany, 23 years ago. Today, Engel and Völkers is one of the leading brokerage companies in luxury real estate worldwide. The company is currently operating in over 30 countries on 4 continents. More than 12,000 people are operating in over 900 locations worldwide. Engel and Völkers offers both private and institutional clients a range of services like consultancy, sales, leasing. That's what we are doing. We as the management board of Engel and Völkers, we get together on a weekly basis with our CEOs and CFOs of our international markets. And our key messages are: the coronavirus is having an impact on the real estate market, that's for sure. Yes, but we do not expect a general price collapse. Activities on the real estate market have neither come to a standstill nor have been any significant price correction in purchase prices or rents. In primary house markets like here in Germany, our shops and commercial offices have reopened since last week. So we are able to do business since last Monday here in Germany. Even during the confinement with contact restrictions here in Germany, viewings and notary appointments took place. We were only 10 to 20% in gross commission income behind our planned numbers. So we are absolutely on track, especially if we compare it with last year. We are achieving nearly the same level in terms of gross commission here in the German-speaking markets compared to previous year. The same applies to our business in Switzerland. In markets, for example, like in Paris, as one of the top metropolitan real estate markets in the world, we do not see a decline of square meter prices so far. We expect price stability in Paris with an average of 7 buyers for one property. Even with 50% of the buyers will remain, it is such a tight market. So it's quite incredible. And normally we have 7 buyers for one property in Paris. So even if 50% are out, we really believe also in the future, such a metropolitan market like Paris will be a really tight market. The second home markets, they are much more affected, but mainly because our international clientele is not able to travel. On the Balearic Islands, for example, overseas investors in 2019, they accounted for 43% of the sales volume. Until now, the coronavirus hasn't put any pressure on offer prices. Of course, a lot of regions in Spain and Italy, which have unfortunately been affected by the pandemic very heavily, the business has experienced a temporary standstill. So we are not able to do any business there because we are still in the lockdown modus. But we have seen that we were also able the last couple of days to open a lot of shops. We do have about 250 shops in the Southern Europe. So it's starting now. The coronavirus is a big challenge for all of us. It offers also new business chances or opportunities. COVID-19, and this is what I really believe, has fastened the digitalization of our real estate industries. Property tours, viewing, and sometimes closing have gone virtual more and more. And this is something which is a great opportunity for all of us. So I really believe we should use it. And Engel & Völkers, we invested heavily in the last couple of years into the digitalization of our processes. In some cases, properties are being sold without buyers having physically been in the property. So we have seen a couple of cases here in Germany, but also in Paris and also in Spain, where we were able to close the transaction without having seen a physical presence of the buyer side in the property. Due to these tools, we as Engel & Völkers, we are able to maintain a very high level of business productivity. Of course, it is a big challenge for all of us, but it works. We are able to do virtual tours. We are able also to negotiate the deals, and sometimes we are able to close a deal with a notary appointment. So it works, and I really believe it's a great opportunity and a big chance for all of us. We still believe real estate has proven to be a preferred asset class. Why? Real estate, and this is what I believe, meets a basic need, the need for security. And especially now in such a big crisis, there is this special need for security. Real estate will remain as one of the safest, tangible, and long-term investment. A privately home is still a safe and stable investment in times of crisis. Therefore, demand is continuously strong. So what we have seen, if we look at our activity level in Spain, but also in France, in the German-speaking market, but also in new markets where we started last year, like Greece, there is still a lot of demand from the buyer side to invest. So people, they still believe real estate is a safe haven. Even during the state of the lockdown, we are receiving good level of inquiries. Like I said, I believe, of course, there is a decline. Maybe there is a decline of 20–25% of new leads, especially for markets where we are still in the lockdown. But it seems like a lot of our clients to buy a property is still part of their long-term investment plans. So how do we see Engel & Völkers the near future? What is our outlook? And as you can imagine, it is quite hard for all of us. So no one has a glass ball to say what will happen in the next 3 months, in the next 2 quarters. So we believe in a fast market recovery, and this is our statement. So we also believe there will be a lot of catch-up effects, especially in the 3rd quarter. After the lockdown modus in a lot of countries, now with the reopening. I have been yesterday, for example, in contact with a couple of offices in Spain. So now, of course, it is much easier for us in terms of doing viewings. So that's why we believe we will see a lot of catch-up effects in the 3rd quarter, and in primary house markets or big cities, metropolitan markets. We currently see more and more transactions. So the movement is much bigger than expected. So when we started to think about, let's say, our business plan at the beginning of the Corona crisis, we were, let's say, much more negative about the development, but we have seen much more movements than expected, especially in the last, I would say, 2 to 3 weeks. Interest rates are still on an all-time low, so that helps a lot. People will continue to look for properties in top locations. So we really believe, especially in the top locations, the metropolitan markets, the primary house markets in Spain, in Italy, but also in France, in the German-speaking market, in the United States, there will be a lot of stability in terms of the pricing. Since the reopening of our property shops, we are starting to see leads and showing they really pick up. So for us, it was really interesting to talk to all our offices yesterday, but also last week in terms of this reopening phase. So the next months could be very active for our agents in all our markets to make up the cumulative shortfall. This is something what I really believe. So there is, like I said, a lot of demand. So now our agents are able to push their operations. So they are now able to do viewings. So that's why I really believe we will see a very strong recovery phase in the next couple of weeks and months, and maybe also these kind of catch-up effects starting with the third quarter of 2020. The real estate market in general should experience a dynamic recovery phase. This is something we really believe not only now, let's say on a short term, in the next 4 weeks. I think this will be the situation until end of this year, and maybe also in the first quarter in 2021. In second home markets, we expect a slight decrease in prices, but also a strong recovery phase to the pre-pandemic prices. Why? Of course, at the moment, it's quite hard. You know, the borders are closed. We do not have a lot of flight connections, but I really believe this situation will change maybe during the summertime, and then we will also see this kind of recovery phase in our second or holiday home market. So these are our statements. This is my key statement for the opening. So I would love to give you a lot of information about our international business. Thank you so much.
Well, thank you, Sven, and it's good to finish the contributions from the panelists on an optimistic and upbeat note, and I'm grateful for that. Now, I'm delighted to say we've got a lot of questions coming in. Always room for more, so please do let us know what your questions are. What I would ask of our panelists, I'm going to go through the questions. I'll go through all of them, if I can, if those who that haven't already been answered. What I'll do is I would ask for fairly crisp, brief responses, please. Sorry to put that down, but what you've said so far has been so stimulating. There are a lot of questions to be answered. Let me start off with one from a well-known freelance in Britain, Jane Dell, who writes for the Sunday Times, the Times, and many other publications. Jane would like to ask the panel, forgive me, Sven, this is a domestic question, but there are some international ones to come.
That's fine.
Jane would like to ask the panel to highlight if they think there are particular areas of the UK where values might find an eventual uplift in the market because of the interest of people relocating. Especially those areas that are perhaps best for working from home, for avoiding some of the problems that we've seen connected with the virus. How do we think that's going to happen later in the year, and particularly as that applies to the north of England? Let's start with Liam.
Thank you. It's a good question, and it sort of ties in with a couple of things we've already heard. I think that for me, the biggest question is actually, I'm not sure it's going to happen. I think there's no doubt people are thinking about open space and all the things that we've talked about. My only comment is, I'm not sure right now that we know that there will be a significant shift in demand or in buying patterns. If you think back to, if I allowed a couple of minutes, think back to 9/11. When 9/11 happened, there was a big question mark over urbanism and the fact that, you know, would people and businesses want to cluster in CBDs globally? We had a new wave of terrorism. There was an assumption that no one would ever want to build tall towers again. And actually what happened in the years that followed was a complete rejection of that hypothesis. And actually we had the biggest shift towards urbanism. We had the building of more and more towers globally. So just because something happens like this, it doesn't necessarily mean actually this is the trajectory that we will follow. My suspicion is that over the next year, 18 months, there will be an uptick in demand for country properties, rural properties, etc. I just feel actually probably in the long run, we probably revert to something closer to type, and actually some people will still prefer to be in urban locations, to remove the commute entirely, and actually not want to be commuting in from far afield. So I think that it's more of this is a short-term trend, definitely. Is it a long-term trend? I'm more skeptical.
Camilla, what are your thoughts as somebody focused on London, but obviously active in the rest of the country as well?
Yeah, I think it's really interesting what Liam was saying and sort of relating it back to another crisis. To a certain extent, I do agree with what Liam's saying. I think the difference this time around is, I think just the fear factor. I think we're already seeing in places like South Korea, I believe, and in China, you know, some evidence that the virus hasn't gone away and that it's coming back in second waves. And I just think that as much as we all really want to believe this is a temporary situation we're in, and perhaps by the end of the year things will be back to normal, I'm not convinced. I think it very much relies on a successful vaccine coming and being made widely available. But I think, you know, people will also start to question, can pandemics happen again? How common are these viruses? You know, could we have another one next year? I think that the fear factor will be there for some time to come. And I think the disruption to our lives will be much more protracted than the horrific terrorist events in 9/11. So I do think that some people will reassess where they want to live. I don't think it will suddenly mean that we'll see a mass exodus out of cities. I don't believe that. But I do think that it'll be interesting just to monitor over the next 12 to 18 months what happens. I think it's too early to tell. Right now, nobody can move anywhere. But I do think people are starting to reassess and relook, and businesses also in terms of staff productivity, and does everybody have to come into the office every day? And undoubtedly, if that pattern starts to shift, people won't have to live right next to the office. So I think that there will be some changes, but I don't see a mass exodus out of cities.
Okay, thanks very much for that, Camilla. Let me take a couple of questions from estate agents who kindly sent their questions through. I'll group them together. The questions are from Howard Kamen, who's from Aston Chase, a London agency, and from Christian Warman from Tedworth Property, another buying firm, I believe. I recall. Hello, Christian. Thank you for your question. In total, the questions are saying, should estate agents be amongst the first business sectors to be able to trade properly, so to speak, after lockdown? There's been a lot of debate in Britain, as you know, about that. So I wonder, could I get Richard's view on that? And then Paula from the perspective of consumers. Richard. Richard, I can't, if you...
Mute, yeah. First one to do it. You would hope so, for sure. I think estate agency is something where you probably could conduct it with social distancing in place. I think a lot of estate agents are looking at this now. I think, you know, if you look at the number of sales that are sort of jammed up in the system, as we've highlighted, I think it's really important that we kind of get people moving again. As I said, the lettings market is finding ways to keep moving in and around the rules, basically. So, but I think, you know, we need more guidance from the government in terms of just how far do you have to go. I think there wasn't much in yesterday's document. You know, resident agents are classed as sort of non-essential retail, so we'll need to see more. But I think it's, you know, there's a really strong case. I think a lot of agents are thinking about it, and I'd hope that they absolutely were at towards the top of the queue, because we need to, you know, the longer we leave it, the more likelihood that sales will fall apart, deals won't happen, and then we'll have some of the negative consequences we've been chatting about today.
That's right. I'll come to Sven in a moment, because Sven will have experience of how other countries have taken their estate agency activity out of lockdown. But Paula, from your perspective, and we've had a few questions mentioning the words safety, reassurance, perception from consumers and so on. How do you expect it to operate in the new normal for the next few months once they come out of lockdown?
Yeah, I mean, I think it's we'd like to see, you know, the housing market, and I think that bits of it can recover quite quickly. It's not just estate agents, though, because where the blockages at the moment is that mortgages, for instance, valuers can't get on site. So some of these ones, and the guidance, although it was quite difficult to understand, and we're hoping for a further statement this week, if we can get the valuers back into properties, we get removal firms. That's the other sticking point. So you might be able to, everyone wants to move, but if you don't have anyone to remove you, and that's where the social distancing measures will be difficult. What consumers really need is all the industry talking and having the same guidelines, because it's so uncertain, that one conveyancer won't carry on. They won't carry on with the transaction, whereas another conveyancer will. One removal firm will. So everyone's interpreting in their own way, and that's what's really frustrating. I do think that in terms of going forward, I saw something about a compliance certificate. What I have seen is that there's some really good guidance coming out for estate agents, for instance, that they would carry out the viewing themselves. They, you know, someone who's looking to sell their property, they wouldn't be in the house when the estate agent comes in. The viewers themselves, the prospective buyers, will be disinfected, will be wearing face masks and things like that. So there's really specific guidance there that will help enable those viewings to happen. But it's not just estate agents opening, we've got to get the valuers out there, we've got to get the mortgage companies, and all bits of industry need to talk together and give a consistent message to consumers, because that's what's really, really frustrating. And they're so anxious, they're so stressed out at the moment now because they're getting different messages.
Okay, Sven, you will have seen agents come out of lockdown in different phases in different countries. What's your perception of how well it can operate?
Yeah, before I will talk about the lockdown phase, I really would like to point out, like I said, of course, the coronavirus is a big challenge for all of us, but it offers also great opportunities. And I really believe our industry has to invest heavily into the digitization, because what we have seen, especially in I would say the last 2 months, we have seen a lot of viewings and also even closing. You know, we have seen it in a virtual way. So what does it mean? We invested heavily in the last, I would say, 3 to 4 years in the digitization of our company, of our processes, here in the headquarters, but also in our network. So I have heard about 6 deals in Germany, but also 1 deal in Paris, where we had a chance to close a deal without any physical presence of the buyer side. And that shows to me that we have to reorganize a little bit of our business. Of course, it is much easier for us now, where we have a chance to reopen our offices in Spain, or also in France, where we had a chance to do it yesterday. But at the end, during the lockdown period, we were also able to be very productive. And I think this is something we have to realize in our industry. We all have to invest into technical tools to be more, or to operate more in a digital way. But like I said, we have seen, since we are back in business in Spain, in France, in Italy, it helps us a lot. So the crisis, the lockdown was a big challenge, but even during the crisis, we were able to remain a very high level of business productivity. And if I look to our numbers and I compare it with previous year, we are nearly on the same level like previous year. So the first quarter was very strong. Even in this, even since, I would say, beginning of March, when we had to close down our operations in Spain, in Italy, and France, there was still demand. We did a lot in a virtual way, and it works. So one thing, of course, it helps us a lot now in this kind of reopening phase. But on the other side, like I said, I really believe our industry has to invest heavily into the digitization. This is, for me, also something we really have to bear in mind. There are a lot of opportunities, and this is how we see it. And of course, now we really try to push our agents globally, that they start with activities. Now they are also able to do viewings in Spain and France, and that helps a lot, that's for sure.
Okay, thanks very much indeed for that. Right, a question now from a colleague of mine. Matthew Lane, Matt at Property Investor Today. How will the second homes market bounce back if travel is restricted and social distancing remains in place for at least the rest of this year? Camilla, what's your take on this?
Yeah, I think it's a really good question. I think, you know, clearly in prime central London, a lot of the second home market is for overseas buyers. And I go back to what I said right at the beginning of this webinar: as good as technology is, I think the reality is very, very few buyers will actually bite the bullet and buy a property they haven't physically been to see. So I think that will put a real drag on the level of transactions happening in the second homes market. I think the other thing to be mindful of as well, which we've not mentioned yet, is the introduction of another levy, stamp duty, for overseas buyers coming into effect in April next year. I think at first it was thought that there'd be this big stampede, this big rush of transactions trying to take place before that date. But I think it will be very difficult for those transactions to happen if overseas buyers can't get here. I also think it will be difficult for transactions to happen whilst the pricing gap between buyers and sellers remains so wide. So, you know, this goes back to my point. I just don't see the prime central London market being immune from price falls. I think it's really interesting that today Liam's talked about prices in central London perhaps dropping, maybe, correct me if I'm wrong, Liam, I think you said 12%. That's really different from, you know, the data that I was reading from you a few weeks ago, where I think Knight Frank said there would be no price drops in central London this year. So I think, you know, we have to wait and see what happens, but absolutely the second home market in London and any developments that are geared towards the overseas market are going to be severely hampered whilst these travel restrictions are in place.
Yeah, Liam, what's your take, not just on central London, but perhaps particularly on the second home market as you see it in the rest of the UK?
Yeah, I think, well, in the UK and also, to be fair, in Europe, I think there are some challenges. And I wonder actually whether, and thinking about kind of short-term or medium-term changes, do people start thinking about locations they can access by train or car rather than places that they can fly to? You know, is there a shift or a change in, say, the south of France second home market that actually it becomes a slightly more domestic market, or more of a market where people can actually drive to those locations, and actually the UK market becomes a little bit weaker? So I think that there probably will be shifts over the next 1 to 2 years in those marketplaces. I think the other sort of bigger story actually on second homes and overseas travel is on the education side. I think that it's too early to tell, but I think schooling is one thing. I think university could be impacted by restrictions. So, you know, will we see as many Chinese students in the UK, for example, as we've seen in recent years? If there's a decline, does that have an impact on, say, on student housing investors? Will you see a recycling of some of those student blocks into the mainstream residential market? And if you do, could there then need to be a shift in, say, planning policy to help actually absorb some of that stock, which will have been built for students, but actually then may need to be repurposed for a wider market? So I think that is quite a significant change which could be coming. Camilla, just to confirm on the forecast, as my comment is, if you saw prices falling at the rate they seem to have been doing over the next sort of say 9 weeks to mid-July, that would suggest a sort of a fall of, say, 12%. But in reality, I think I just don't see people accepting that level of discount at the moment. And actually looking at that spread between offers and offers accepted, it seems like there will be more like stickiness in the market rather than price falls at that level.
May I add something to Liam about the holiday home markets? I think one thing will be for sure, local holiday places will become more popular. So second home customers, they are looking for places they can reach by car. This is something we see. There's a lot of demand, for example, here in Germany for the North and Baltic Sea. So we see a massive increase of inquiries for people they would like to spend their summer holidays in holiday places they can reach by car. I think this is a trend we will see, especially this year.
Great, thanks very much, Sven. Ask a sort of a wider economic question. We've had some come in regarding the UK economy and the likely long-term impact that the virus is going to have on that, particularly on unemployment. Richard, what's your view on the influence of what may be a worsening economic situation than people have anticipated so far in the UK? How is that going to impact the housing market?
I think, as I said earlier, I think it's largely in the short term all about transaction volumes, because people will just delay. I think I think lenders are probably advising customers who are becoming unemployed, obviously, not to proceed, or if you're on furlough, put your deal on hold, etc. So over history, there's been a close link between how the economy performs and how the housing market performs. The housing market really is just an extension of the economy. And I think but I think this is the point I sort of alluded to in my introduction, which is sort of, before in the late 80s, we had interest rates, going up to sort of 14, 15%, which, and they had big unemployment. And so there was a lot of repossessions, and then house prices fell significantly. And there was like a 4 or 5 year negative impact on the housing market. Last time around, because rates were so low, I mean, repossession levels are much lower. We had forced sellers, prices fell 15%, but that was largely because of lack of credit. I mean, this time around, it seems to me, yes, I think the Bank of England didn't quite call them forecasts, they called them scenarios, I think, or a scenario or indicative scenario for unemployment. I think the big thing for me is how long the furlough scheme carries on, and just how far is the government prepared to keep supporting employment if they truly believe it's going to be a sort of a short-lived affair running into sort of the middle of next year. So, and it's all about how many forced sellers there are, how will banks respond, how much forbearance will there be, and just how much support you have almost between government and the corporate sector to sort of smooth through any bumps. I mean, there's a limit on how far we can go to sort of support all this stuff. But I think, as people have said, I think house prices are sort of sticky on the way down. There's a lot of equity in the housing market. People haven't, we haven't come into this downturn in a red hot market. People borrowing crazy amounts of money, taking 95% mortgages, stretching their incomes because they're just not allowed to. So I think there's definitely more, parts of the country still are sort of relatively unaffordable. Unaffordability has unwound over the last few years. So again, all these things point to sort of house prices probably maybe falling less if they did fall than last time, based on how the economy is going to play out. But I think it's just too early to say at the moment, Graham, is the honest answer. I think for me, it's all this focus on who are the forced sellers, who's really going to be forced to sell. And again, a lot of that's going to be down to how banks respond.
Okay. Well, I think we're going to find out more about the furlough situation today, my understanding, with much expectation that it's going to be extended in length but reduced in financial impact for each company concerned. So we'll hear more of that about 5 o'clock, I understand. Right, a couple of questions. We've got 15 minutes or so left. So I'd be grateful for the contributors to continue to be as crisp and rapid as they could be, please. A couple aimed at Paula and Camilla around a similar subject. One is from Sam Smith of Liberty PR, who asks whether new build properties in particular pose perhaps the safest option for people who are health conscious or worried about purchasing at the moment. And another allied question, if I can find it, from Bernard Weiss, who I think is an agent in South Africa at Cape Coastal Homes. Thank you, Bernard, for getting in touch with us. And that is, what are sellers' minimum safety expectations when it comes to viewings? And are you using both buyer and seller pre-qualifications and declarations? And that's a question which I'll ask Camilla to ask first, and then let's go to Paula to talk about the broader safety angle.
Thank you, Graham. It's a really good question, and I think this goes back to what I said right at the beginning of the webinar, which is we need guidance. I really don't think it should be down to individual agencies to come up with a plan of how they keep everybody safe. I really do believe that the way forward to make buyers, sellers, agents, everybody working in the industry to feel safe about going about their jobs is to have official guidance coming out. And I think that will take some time, but I think it's greatly needed, because there's lots of things you can do, but I do believe that it needs to be official guidance, and I think everybody then needs to stick to it. So we await that. In all honesty, we await that right now. In terms of my own business, my team are working from home. We are not carrying out viewings. Going on to the new build question, I do think that obviously any home that's vacant, that doesn't have anybody living in it, of course is easier to view and isn't putting the seller at risk, because there's nobody living in the property. So, in terms of the market slowly coming back to life, I do think that viewings on new builds, and indeed any properties that are vacant, will be much easier from a safety perspective.
Hi.
Great. Paula, sorry, forgive me interrupting, but just for yourself and others, a reminder, the question was whether new build properties might be safer for people to look around. And in addition to that, one other question that's come through on a similar subject, specifically for you, Paula, is do you foresee the implementation of a sanitary compliance certificate before buyers can view a property on site? That sounds like the sort of paperwork which I suspect most of the property industry wouldn't want, but I think you get the gist of the question there.
I think with the new build situation, it is true that people can view it more safely, but I think there's a lot of uncertainty about buying new builds. So in particularly that completion dates, they're very uncertain, and of course construction stopped on site. So that coupled with a new build premium, that people are getting a bit nervous about buying new build because you don't know when it's going to complete, and people want that certainty. So I don't think that with that thing that new build will be, seen to be more clean or, safer to be in. I do think though with the idea of viewings is that, and I completely agree with saying that the seller's pack, that actually having all that upfront information, so there should be fewer time wasters. So if people are serious about selling their property, they will pull together that information. They should pull that together information and be honest about title deeds, boundaries, disputes, all that sort of information. And that's what the industry is really pushing for. And I think again, also they'll also probably be asking for, if somebody is going to go view their property, that they're properly qualified, so that estate agents are doing their job. And I think that's where it will move to go there. I don't think we're going to have a sanitary compliance certificate. I don't think we've got the EPCs, but it's that being safe, and there'll be a strong guidance about how you conduct the viewings and do the virtual viewings first, and then maybe perhaps getting a surveyor in or whatever, and maybe more reliance on people who, if they only have a 15-minute chance to view the property before they purchase, that they might have more reliance and want a professional in there to inspect the property to make sure it's fit for purpose and it's good value for them.
I think it's very important for our real estate industry that we have a clear guidance in place. So what we did in the last couple of weeks, especially before the pre-opening of a lot of shops in Germany, but also in Europe and in the United States, we had over a clear guidance in terms of safety regulations. And I think that's necessary. It's about training. It's about to hand over information how to do a viewing. So I think it should be possible to do a viewing, but but for sure there should be a clear guidance from all of us how to do it. So that's why we said we will train our agents how to organize a viewing. So then it's possible to do it.
Sven, could you please just talk me through, if I wanted to buy a property in Germany now, and I was a serious buyer, can you talk me through the practicalities of what a viewing would be like?
Of course. So what we did, we organized a lot of face masks for our agents, and so that they are also able to use it by themselves, but that they are also able to hand it over to their clients, to their customers, to the potential buyers. Then normally we try to do the viewing just with one person. Also, sometimes we use overshoes. So this is something what we can organize. Sometimes we try that the owner will be not part of the viewing. So then you have just the potential buyer side to do the viewing. So then it's possible to organize a viewing.
That's great. Well, thank you. I mean, that's in many ways what I think we would be expecting, and it's perhaps been surprising that hasn't yet been introduced in the UK.
And of course, it's about the distance. So 1.5 meters. So this is something what we trained from the beginning. So they really should think about it. They should know it. But that's quite easy if you really think about the basics.
Sure. Right, let me just deal with the last few questions, and I hope everybody will feel that we've done justice to what they've been asking. We've got a question from Matt at 3 Eggs Property Management. We've heard from Sven about how influential video viewings have been in his experience. In the experience of, let's say, Liam and Camilla, the online interest that's been expressed in the UK, both in visits to portals and in virtual viewings, you think that's been genuine interest, or has it been killing a few minutes at home in the boredom of lockdown?
Shall I shoot? I think it's probably a bit of both. I think the fact that you know, we are seeing quite a few new buyers register through our agencies, and actually, if you're going to take the trouble to register with an estate agent, it probably means you're relatively serious about actually undertaking a transaction in the near future. Having said that, new buyers are down sort of 60%, give or take. I think, you know, Richard's point was well made, that actually there is just there is a feeling that there is a bit of activity out there, and people are looking at what happens next. It's difficult to tell what the precise split between sort of interested and committed is, but I think it's probably slightly more committed than we might initially think.
Yeah, I mean, I think it's a good question. I think it's really difficult to know, you know, to do a survey on all the web surfers out there, how many of them are just web surfing because they're bored and they like to look at, you know, properties, and how many are actually going to commit. I think it's, you know, I think even without COVID-19, there's always people surfing the internet, loving to look at luxury listings. So I think, you know, there's always going to be an element of that. I think from my perspective, you know, we have been quite busy taking serious inquiries from investors who are really looking quite keenly at the market. But I think, as I said earlier on, the challenge for us as their buying agents is going to be to produce these magical buying opportunities, which we're not currently seeing, but may start to come once the market starts to operate again.
What is also quite interesting, the quality of leads and also the quality in terms of the viewings is improved a lot in the last couple of weeks, because someone who's doing now a viewing has a serious interest to buy something. So this is also something what I heard on my weekly calls with all the MDs of our offices. So they really said that the quality of the leads is much better compared to what we have seen in the past.
Okay. A quick question related to that to some extent to Paula. If virtual sales do become some sort of part of the market, no matter how small, but certainly the use of virtual viewings and other technology becomes a bigger element of the house buying process, do you think there's enough consumer protection in place? We've got a lot of consumer protection that relates to orthodox sales processes, no matter how many shortcomings we think they may have. What about protection for the virtual viewings and the like?
I think just generally there's a real lack of consumer protection, particularly buying new builds, which is why the government is committed to legislating on a new homes ombudsman. So, and I think that no matter pre-COVID, that we need to have better protection there. I don't think it's going to happen like, and I saw the question about saying it's a bit like, you know, you can't return a house, and I think that will still carry on, and it's really difficult. It's still buyer beware. You still have to go and you see what you're buying, and that's why I'm saying that, you know, if more reliance on professionals like surveyors doing proper sort of measurements of properties and that sort of thing will be more important. We do see, when I have my sort of weekly chats with people, is that I do hear that everyone's getting a lot more complaints because I guess people have got time on their hands. So it could be that actually people, if they are unhappy with the property they bought, they will go through the convoluted channels of either trying to sue their conveyancer if they weren't properly informed, or the seller because they weren't upfront about the information, or the estate agent for misinformation. So there could be more of that, people much more aware of their existing consumer protection, but I don't think there'll be anything, you know, an appetite for more barriers to get people to stop, to have barriers for people to move in the property market.
Okay, a question from Emma Holden of the Oracle Group, which I'm going to put to Richard, because Zoopla has done a lot, not only about getting new build clients on the portals, but also a lot of tuition for first-time buyers, and this impacts on both of those groups. Emma asks that for new build and first-time buyers, the time at home has given them an opportunity to research where they should rent or move to, perhaps in a way that's greater than would have been the case in normal life. Will that lead to a surge in reservations? will that lead to some sort of change in buyer activity, do you think, Richard? Richard, you need your mic on.
Sorry, second time. We've been doing a lot of work looking at how all these measures are, what's happening to demand, what's happening to searching by price band, by region, and you can see some evidence that people are sort of searching around, interested in different options, different markets that offer better value for money. I say we've certainly seen the new build market. The amount of sort of buyer inquiries, the interest in new build is still there because of Help to Buy is still in place. For all the things that Paula said, and I totally accept them. I think new build sort of there, it's ready to roll as a scheme. You're not in a chain. There's incentives, etc. So I think there's two things really, Graham. I think I'd imagine there's people trading for value for money in the rental market. A lot of the renters, probably people maybe being more affected by some of the furlough schemes and maybe any increase in unemployment. So people are sort of looking around for value for money on the one hand, and then equally, again, from personal experience of my colleagues and 2 months of lots of Zoom calls with young people, Zoopla's a very young business. There's a lot of people I think are sort of quite keen to reconsider their housing options and the space they currently live in, which they might just live in, 7 in the evening till 7 in the morning. You're suddenly in it 24 hours a day for 2 months. Then you kind of start to rethink about how you want to work. So I'm not saying there's going to be a big increase in reservations, but we've definitely seen decent demand in the lettings market and across all price bands. And I think we have seen around London and out of London in those sort of first-time buyers trading up to a larger property kind of price bands, there's definitely been an increase in activity. So there's definitely things happening. People are looking. Again, it's whether that translates into looking to sort of demand, but demand is certainly there as well, but it's certainly not back to where it was at the beginning of March.
Okay. Now, forgive me, time is short, but thank you so much for your contributions and for the questions that kept coming through as well. I hope I've done justice to all of them. Now, I know it's obligatory in this sort of thing to ask everybody a slightly whimsical, slightly bizarre final question. So I'll just ask, there's a serious element to this. Let's say it's a new year, 2021, 7 or 8 months from now. When you look back on the property market this year, what's your one sentence that you will describe as what happened and how the market will be at the start of 2021? Camilla.
Mexican standoffs. I think it's a real issue. I think it will be an issue that will continue to play out for the rest of this year and indeed into next year. And I maintain that, transaction volumes will remain extremely low, and the transactions that will be taking place will be where sellers really need to sell and are willing to transact at levels that are acceptable in the buyer's mind.
Sven?
I would say it was challenging in 2020, but we did a great job, and I'm pretty optimistic for 2021, to be honest.
That's great. That's a good line. Paula?
It's not about property, it's about homes. The homes we live in, it's not about buying and selling property. And I've also was fine as I think that, I wouldn't be surprised if we're back, it just becomes a distant memory.
Okay, well, let's hope so. I've got to say, you've got the journalist's favourite quote of the day there. It's not about property, it's about home. I can see that one being used a lot. Leah?
I'll mute myself. I would say more familiar than we expected. Not to say some things won't change, but I think fundamentally most things will probably be unchanged in the long run.
Okay, and Richard, how do you see 2020 if you had a New Year's party?
Looking back, I go, wow, the government went further than we thought, and consumers were pretty resilient and adapted. But we're still living with this virus until the vaccine arrives, which I'm assuming middle of next year.
Yep, I fear you're right. But thank you so much for all of the contributions. Thank you so much to everybody who asked questions. Before I throw back to Henry, I have to thank him as well for asking me to be involved. And I've got to thank his colleagues, Ashley Pearson, David Williams and Owen Mitchell, for doing some of the technical and practical things that made sure I didn't embarrass myself too much. So thank you so much to everybody. And Henry, back to you.
Graham, far from embarrassing yourself, you've been a superb moderator. So thank you for sitting in the chair. And in what is an existential year, thank you all to our panelists for a very focused and detailed debate. It was extraordinarily interesting. I think from this and the audience we've had, Property for Media may well look at further press conferences. So PRs out there, do talk to your spokespeople. Journalists out there, do feed back to us. We want information. If journalists are writing stories today focused on the views of our panelists and you need a lead to the PR contact and you want further information, just come to us. If you don't have the contact, very, very happy to help. We've had a wonderful audience. It was lovely to get an email from Helen Davis from the Times during it to say how much she was enjoying it and what a top quality panel she thought we had today. So well done, panelists. It's been a great debate. We've learned many interesting things. Will the rate of digitization in the property industry now increase as a result of this? Or will buyers persist in wanting, in Camilla's views, to be there and see the property? Will we flee to the country? Will we live in caves? Or will we get back to the old normal rather than a new normal? Who knows? But to Camilla Dell, Liam Bailey, Sven Odia, Richard Donnell, Paula Higgins, and Graham Norwood, thank you for a great debate. We may have heard about the Mexican standoff, but I'm going to end with a Mexican wave. So thank you very much indeed, everyone, for joining us today. It's been great fun, and see you the next time. Thank you very much indeed.
Thank you so much.
Thank you.
Bye-bye.
Bye-bye. Bye-bye.